bar that breaks below the candle low and closes back above it, that is a clear liquidity sweep. If you switch to a higher time frame, you will still see this liquidity sweep, but it will be hidden inside just one candle wick. On the higher time frame, this move is only visible when you mark the previous candle's high and low, and then observe the next candle that creates the liquidity sweep. After liquidity is captured, price returns inside the range, and the third candle drives price in the opposite direction. This confirms the liquidity sweep, and begins what we call the distribution phase. If you drop back down to the lower time frame, you will see this phase as a strong acceleration move. This is where momentum begins and the real move starts. Alright, now let's jump into a real chart example so you can actually see how this one candle and the power of three work together in live market conditions. We're looking at the Euro, US dollar on the 1 hour chart. Here's our anchor candle, you mark the high and the low. That immediately gives you your range. Now watch what happens next. The very next candle breaks below the low, but look closely, it closes back inside the range. That is a major clue. On the higher time frame, this tells you manipulation just happened. This is the liquidity sweep phase of the power of three. Now let's zoom into the 15-minute chart to see what actually happened inside that 1 hour candle. And just to be clear, I'm only using the 15-minute chart here for illustration purposes to make the power of three easier to see. In the next examples, we'll use the 1-minute chart, which is what I actually recommend for scalping. This strategy works perfectly for scalping and day trading. You just adjust the execution time frame. So inside that 1 hour candle, first we had accumulation, price moved sideways creating a small consolidation. That's smart money building positions. Then we got manipulation, price spiked below the range, sweeping stop losses sitting under support, before snapping right back inside. Classic stop hunt. Here's how you would trade it. Entry. After price closes back inside the range, confirming the liquidity sweep is over. Stop loss, below the wick of the sweep, for tight risk. Take profit. Target the high of the 1 hour range, which now acts as liquidity. And look what happens next. Price rockets straight to target. Clean setup, no confusion, no indicators, just pure price action with smart money logic. This is exactly how one candle works hand in hand with the power of three. And this is just one example. Once you learn how to read a single higher timeframe candle as a roadmap, and then zoom in to execute on a lower timeframe, you'll start spotting these setups over and over again. Now that you understand the foundation, stay with me, because I'm about to show you exactly how to trade this step by step using a high probability scalping strategy. Alright, now let's shift gears and talk about the two types of one candle trading setups you're going to use in this strategy. First up, type 1, the classic 3 candle setup. This is the foundation setup. You'll see it over and over again across all time frames. Forex, crypto, indices, stocks, it doesn't matter. The logic stays the same. Let's start with candle 1, the anchor candle. This candle sets the range. Its high and low become your key levels. This is your king candle, the candle that controls everything that follows. You mark it, and you trade around it. Now we move to candle 2, the manipulation candle. This is where smart money makes a move. Price creates a false breakout above or below the anchor candle's range to grab liquidity and trap retail traders. This is usually a pin bar or a wick rejection candle designed to trigger stop losses. Finally, we reach candle 3, the reversal, also known as the execution candle. This candle explodes in the opposite direction after the liquidity sweep. This is the candle you want to ride for profit. But here's the key. You don't enter on candle 3, you position yourself before it forms, right after the manipulation is confirmed. This setup is simple, clean, and incredibly powerful once you know how to execute it. Alright, time for the second setup of the one candle strategy, the inside bar trap. The second setup is based on the inside bar pattern, and it works beautifully with our one candle strategy. Here's how it works. You have one strong candle, and then a smaller candle forms completely inside its range. That smaller candle is your inside bar, a sign of market indecision and hidden accumulation. You simply mark the high and low of the first candle. That's your range. The inside bar shows the market is coiling, building energy before a move. Then watch what happens next. Price fakes a breakout of the range, grabbing liquidity. It snaps right back inside, that's your confirmation. Then it reverses hard in the opposite direction. That's your entry. The breakout is the manipulation. The snapback is your signal. The reversal is your opportunity. This is one of my favorite setups because it works in trending markets and ranges, and it fits perfectly into scalping or day trading. Now let me show you a real chart example so you can see exactly how we trade this setup in the market. We're on the British pound US dollar 15-minute chart. First, we identify a strong candle that becomes our leading indicator candle, also known as our anchor candle in the strategy. We simply mark the swing high and the swing low of that candle. Those are now our key levels. The swing high acts as resistance and the swing low acts as support. Clear and simple. Now watch what price does. Price breaks below the support, below the swing low. But instead of continuing lower, it closes back inside the range. That right there is a sell-side liquidity sweep. What does that mean? It means smart money just grabbed liquidity from breakout sellers who chased the move down. Once that liquidity is collected, price is likely to push higher, at least back toward the swing high, where the next area of liquidity sits. Now, let's zoom in to the 1-minute chart, which is our execution time frame for this 15-minute setup. Look closely, the exact same thing happens again. Price breaks below the same level, sweeps liquidity, and snaps right back inside the range.